Happy New Year, Lynchburg and the surrounding areas. Our local market defied national trends this year. So let's take a look at what happened locally in 2025, and I'll also share a quick tip for home hunting in 2026. Average conventional interest rates dropped from 6.85% to 6.57%. Right now, the national average for a 30-year conventional loan sits at 6.20%. The 50-year historical average is around 7.7%, so we are still well below that. The 30-year median rate is 5.88%. You see that there in the blue, and that means we're getting closer and closer to those norms that we're used to. The median home price rose 3.5%, increasing from $289,000 to an annual average of $300,000. That's for the year. And 2026 is already off to a strong start with the highest 90-day median on record at $309,700. Full affordability statistics will not be finalized until workforce income numbers are released, but based on the most recent census and filtering out for workforce households likely to enter the market, the front-end ratio for the median home came in at just 25% of the median workforce family income. For long-term wealth building, the ideal target is no more than 25%, and anything above 30% tends to leave buyers house poor. By that measure, Lynchburg is in a very strong and healthy housing position. This week alone, 62 brand new listings hit the MLS, and that number is expected to continue to rise in the weeks ahead. The most expensive home sold in 2025 closed at $6.7 million. That was 3021 Rivermont Avenue in Lynchburg, listed by Robert E. Dawson of Berkshire Hathaway. Over the course of the year, 254 homes increased their asking prices, while 3,969 price reductions occurred throughout the year. In 2025, 3,651 residential and multifamily homes were sold, and they sold with an average sale price of $175 per square foot. The average home took 41 days to sell, but half of all homes sold in fewer than 17 days. That means 1,825 homes accepted their final offer in under 17 days. On average, 102 new listings entered the market each week. So, what kind of market did we actually have in 2025? Contrary to early opinions, which I disagreed with, we remained in a light seller's market. If you have watched these updates before, you have heard me say this: the $200,000 price range is slowly disappearing. In 2023, that price band made up of 34% of the market. By 2025, it dropped to 30%. And the opposite occurred at the $300,000 level, which grew from 20% in 2023 to 24% last year. The price range with the largest increase, though, also had the longest days on market, the $800,000 price range. Meanwhile, homes priced around $100,000 saw the largest decline, down 21% year over year. As expected, rents increased last quarter. The 75th percentile now stands at $1,904 per month, with the average rent at $1,714 for a basic 3-bedroom home. So, how did buyers purchase homes in 2025? Well, 24% paid with cash, and that number could reasonably be doubled when accounting for off-market transactions. 47% used conventional financing, 9% used VA loans, and 19% purchased using FHA or USDA loans. So, what if you are considering buying in 2026? First, there is no housing bubble. The 2008 crash was driven by subprime lending, and as we just discussed, that type of lending is not present in today's market. Median home prices remain at roughly 25% of the median workforce household income, which keeps housing affordability in our area safe. Even so, values still appreciated 3.5% last year. Meanwhile, cash sitting in low-yield savings accounts and under your mattress continue to lose value to inflation and rising home prices. So here's what you should do. Control this year by moving into the home you've been working towards. Make 2026 your year, and it all starts with a simple phone call. Make the call that can change your life. I'm Nathan Haefer with Haefer Homes, powered by Keller Williams. Happy New Year, Lynchburg. Live, dream, own.